Hello and welcome to the Armstrong Risk Report. We will inform and educate you on critical risk and insurance issues facing your business. Our host, Jason Blands, will bring you weekly updates on how to manage your risk. Today's topic focuses on workers' compensation. Now, let's turn it over to Jason.
Welcome to the Armstrong Risk Report. I'm Jason Blands. Most business owners look at workers' comp as just another bill they have to pay, a necessary evil. But what if I told you there are hidden levers you can pull to actually control the cost? Today, we are uncovering the workers' comp secrets that you might be missing. Experience mods, the 1099 trap, and the Audit Surprise. Let's dive in. Workers' compensation is layered. It's not just about the policy, it's about the factors behind it. The biggest one, the experience modification factor, or the X-mod. Think of your X-mod as a credit score for safety. 1.0 is industry average. If you're at a 0.8, you're getting a 20% discount. If you're at 1.2, you're paying a 20% penalty. Here's the secret. Frequency is often more damaging than severity. A bunch of small trips and falls can hike your rate more than one major fluke accident. Why? Because frequency suggests a lack of safety culture. To fix the mod, you have to fix the frequency. Now let's talk about people, specifically 1099s versus W-2s. This is where I see owners get into the most trouble. There's a common myth that if you hire someone as a 1099 contractor, you've opted out of paying for their workers' comp. The reality, the insurance companies doesn't care what you call them. They care how the law defines them. If that contractor doesn't have their own insurance, or if you control their schedule and tools, an auditor will likely reclassify them as an employee. You'll end up paying the premium anyways, usually as a surprise bill at the end of the year, plus potential penalties. This leads us directly into secret number 3, the policy audit. Most owners don't realize that a workers' comp policy is essentially an estimated bill. You pay based on what you think you'll do in payroll. At the end of the year, the carrier checks your math. If your payroll grew or if your job classifications were wrong, you're going to get a bill due notice. The mistake is being reactive. If you keep clean records and work with an advisor before the auditor nods, you can avoid these 5-figure surprises. I want to wrap up with a pro tip on claims management. What happens after injury is just as important as preventing it. A return to work program is your best friend here. If you can get an employee back to a light duty role, even if it's just filing papers or answering phones, it keeps the claim medical only instead of lost time. That single move can keep your X-mod from skyrocketing. It shows your team you care, and it keeps money in your pocket. The bottom line, workers' compensation isn't just a policy you buy, it's a system you manage. When you understand the X-mod, classification, and the audit process, you stop being a victim of your premiums and start controlling them. If you haven't reviewed your program through this lens lately, we love to help. At Armstrong Insurance Consultants, we specialize in uncovering these hidden opportunities. Thank you for joining me on the Armstrong Risk Report. I'm Jason Blands. We'll see you next time.